Joe, it's like trickling out. I honestly can't keep track of everything, but we're looking at higher corporate taxes, but not as bad as maybe President Biden wanted.
That's right. That's kind of the story across the board here, Alex. We've got a higher corporate tax rate, 26.5%, higher capital gains tax rate, 25%. To your point, both are below what President Biden asked for. But the Ways and Means Committee also added some things that he didn't ask for, like a 3% surcharge on people making more than $5 million a year. That would generate some $127 billion a year. If you add all of this up, and again, all this is likely to change, the price tag comes to $2.9 trillion. Remembering the goal was $3.5 trillion. The thing is, when you add dynamic scoring, and by that I mean how this bill might pay for itself by spawning economic growth, you magically get to $3.5 trillion. Now, Senator Joe Manchin, as you've been hearing a lot, says that's too rich for his blood. He doesn't like that price tag. But knowing that this, in fact, apparently pays for itself, at least through the eyes of House Democrats, might give him a little bit of cover. Manchin's not the only one, though. Giving us a sense of how tenuous all of this is, Senator Mark Warner of Virginia, a Democrat, threatened last night to vote against all of this if it didn't have more money for affordable housing. Just reminding us of how much work, Alex, Democrats have yet to do.
Yes, folks, you saw that clip from Bloomberg News. The Democrats have the wealthy and big corporations in their sights. Welcome to this episode of Ignition Time, everyone. My name is Dr. Nitin Chhoda with Ignition Time. This right here is some information about me. Check out my introductory video. You'll learn more about who I am, what my journey has been like, and why you should listen to me. You'll learn how I was able to overcome the cycle of poverty, and I reveal all my secrets on how I have the honor, the privilege of living the American dream. And I want you to one day live the American dream, and I believe you can. What is the first step in helping everyone live the American dream? Well, as far as the Democrats are concerned, let's start with the headline of this article on your screen from Bloomberg. What's in Democrats' tax plan? The wealthy individuals and large corporations and companies are in their sights. In fact, the Ways and Means Committee proposal from the Democrats would raise top tax rates, and the committee is set to consider this package in the next 48 hours. So, what's going on? The House Ways and Means Committee, which basically is a committee that creates proposals that then get passed by the House and the Senate and then get signed into law by the President, they release the most detailed picture yet of the big tax overhaul that the Democrats are designing to help pay for the major expansion in all the spending that President Joe Biden and the Democrats want to do. In fact, the House panel issued draft text, and this draft text essentially is going to be part of the $3.5 trillion 10-year spending package. So these proposed tax increases would actually increase government revenue by $2.1 trillion over 10 years. And when these tax breaks are taken into account, the Ways and Means plan could provide $871 billion in new revenue to be used for other spending priorities. In fact, President Biden has actually pledged that those making less than $400,000 a year will not face higher taxes. So, what are the highlights of this new proposal from the Democrats to target the rich, the ultra-wealthy, and large corporations? Let's start with income taxes. House Democrats are proposing to raise the top personal income tax rate to 39.6%. Remember, these are federal income taxes. Your state taxes are on top of this. So if you fall under that category, if you're making more than a couple of $1 million a year, that was meant to be a joke, folks. If you're making more than a couple of $1 million a year, your top personal income tax rate will increase from 37% to 39.6%. And by the way, this will reverse the cut that actually got signed into law by former President Trump. The committee also proposed a 3% surtax, which means a surcharge, an additional tax on individuals with adjusted gross income of more than $5 million a year. This is something new. This is not something that President Biden has talked about earlier. In fact, Democrats also proposed to raise $252 billion by expanding the net investment income tax to cover income derived in the ordinary course of business for wealthy taxpayers. Basically, what that means is a lot of rich individuals, when they make money from their companies, they will end up paying more taxes. And I can tell you, they will not be happy about that at all. In fact, the backlash has already begun. I'll be covering that in another video. Now, let's take a look at changes to capital gains. The House bill would also increase the capital gains tax rate to 25% from the current 20% for, I quote, certain high-income individuals. By the way, this is less than the 39.6% that was originally proposed by President Biden to equalize the taxation of investment and wage income. President Biden originally said, hey, let's tax rich people 39.6% on their wages as well as their investment. Now, on top of this, there would be a 3.8% Obamacare tax on investment on top of all this, meaning that the richest Americans would pay 28.8% federal rate on realized investment returns. In other words, if a rich person makes a substantial amount of capital gains under the Democrats' plan, previously they were paying 20%. Now they'll pay 25% plus 3.8%, meaning that the richest would pay 28.8% federal tax rate on investment returns. By the way, President Biden had also targeted a very long-standing capital gains tax break for rich people on inheritances, and this was called a step up in basis. Now, this actually allows beneficiaries to use the market value of assets at the time of inheritance rather than the actual purchase price as the cost basis for capital gains, which means, let's say if you bought a house for $100,000 and let's say that house appreciated to $300,000 in 20 years, and let's say, something happened to you and, your beneficiaries who inherited the house after your passing now get the house at $300,000. Under the current step up in basis, the beneficiaries will not have to pay any tax on that increase. What President Biden was trying to do was to eliminate that step up in basis so that the beneficiaries would essentially be taxed on the additional $200,000 in value of these properties that are inherited upon the passing of the primary owner, and then the beneficiaries would then be able to essentially inherit all that property, all those assets tax-free. So President Biden was originally trying to do away with that. It does look like that is actually going to survive. Now, let's take a look at corporate taxes. President Trump in 2017 instituted a corporate tax cut that will get significantly rolled back. And so the top corporate tax rate will be raised from 21% to 26.5% under the proposal from the Democrats. Now, I can tell you that the Republicans are going to be super unhappy about this, but let's wait and see what exactly happens here. I believe this issue is going to be one of the most hotly contested issues, and it's going to come up for a lot of debate between the Republicans and the Democrats. But Joe Manchin, who's a conservative Democrat from West Virginia, whose support is absolutely critical to the passage of this bill, has said that he can only support an increase in the corporate tax rate up to 25%. In fact, instead of a flat corporate tax rate, Democrats are actually proposing an 18% rate on the first $400,000 in income, 21% on income up to $5 million, and 26.5% for any income above that. So this is very interesting. It's very clear that the Democrats do want to raise taxes. Now, there are some additional requirements from the Democrats in terms of carried interest, IRS audits, and SALT tax deductions. But these are the key highlights. The bottom line here, folks, is that the Democrats want the rich to pay more. Let me know whether you agree or disagree with these initiatives, with these plans from the Democrats to make sure that the wealthy pay more money when they have capital gains, when their properties go up in value, when their stocks go up in value. Let me know whether you think it's fair for the wealthy to pay significantly more federal income taxes, because it's quite clear that the wealthy have many different sources of income, not just their wages, but also investments and other assets like real estate, rental income, stocks, and dividends. Let me know whether you agree or disagree with this initiative from the Democrats to make sure that the wealthy and large corporations pay more. I can tell you that the wealthy and large corporations have significant power and significant lobbying groups. In other words, they have representatives who are paid very well in order to rub shoulders with all our lawmakers in an effort to try and influence policy at the highest level in Washington, D.C. So I can tell you that despite all of these proposals, I don't think all of them will make it into the bill, primarily because of Joe Manchin and also because the wealthy have very powerful forces that are actually inside Washington, D.C. to try and influence the way laws are written. Please click the like button. Please click subscribe. Please enable notifications. Thank you so much for being a viewer and a subscriber. We work very hard on this channel 24/7 to bring you the latest news and to bring you an honest an unbiased view of what's happening in the country, the economy, as well as our money. Once again, please click the like button. Please click subscribe. Please enable notifications. Also, follow us on Twitter. This right here is my Twitter feed. You'll be able to keep up with all the latest news stories on Twitter. Our Twitter handle is ignition_time. That's ignition_time. Thank you so much for watching. I appreciate you. And I'm looking forward to seeing you in the next episode of Ignition Time. Take care. Bye.